All right, we're live.
All right, guys, welcome to Portfolio Builders March 18th Trade Alert. We've had a wild ride. Last Monday, we all wish we took some big profits. I had told you guys if you had bills to pay, to take it. Otherwise, I was holding longer. And so the general theme is that, can we make sure I'm the only one with audio for now, Ryan? Still got some random audio. Okay,
There we
thanks.
go. I got it.
Okay, great. So yeah, last Monday we said if you have bills to pay, take some profits. Otherwise, I was holding on to the position. The bet was that stocks would keep crashing. We got that part right. What did we get wrong? Did not realize that people like Ray Dalio, maybe Deutsche Bank, who knows who else? They're talking about Citadel, Millennium. These are all $100 billion plus hedge funds. Deutsche Bank has trillions on its balance sheet. And so the big picture is that we did predict that stocks would keep going down. In a normal world, TLT would have shot way above 180, probably be sitting at 190 by now. It didn't happen. What's going on? What's wrong? That's what everybody wants to know. And why do we continue to hold our position? Okay, so let me start off by going through the trailer and then I'll answer all of those questions. So let's start from the top. We've been watching this crossing for the last really month, and the prediction was that the SPY would crash and the TLT would cross over. And we got that part right, and then all of a sudden the TLT crashed 10 points at the close of yesterday. And so every single asset class really is on fire, from gold to oil to stocks to bonds to corporate credit. You name it, there is a massive margin call happening worldwide in many, many different trading strategies. And so the basic explanation for why I'm still long the TLT is because I believe the Fed, rather than cease to exist and give up, will use the tools it has approved, which is to buy treasuries. So I believe in short order, they will have to come in and aggressively buy, especially the 30-year treasury, which is what we're holding. So for old members, you have no change. We are holding our position. If you're in our pro membership, I gave you a put option to protect against downside risk on our ETF position, and we're still long on the call options. So the big picture just really hasn't changed. Private sector is going to get crushed. It's just starting to get crushed. The layoffs are just starting to happen. The lockdowns are still, I mean, if you go look at the beach in Florida, you've got tens of thousands of idiots running around partying, spreading the disease. So it's just a matter of time before the entire US economy is completely shut down. So what happens when the private sector gets crushed? Well, the Fed has to incentivize investment into the bond market, and they do this by making bonds appreciate in value. So that's what they're allowed to do, and I believe they will aggressively begin doing that. The bottom line is every asset class crashed at the same time. It looks as though this was a coordinated attack by China and Russia. Russia just demolishing the oil market. We know that China has huge positions in our equity and bond markets. And so it does look like every rally they're bidding it up, and every sell-off they're selling it hard, creating extra volatility. So when you do this all at the same time, it's ruined some very popular strategies used by people like Ray Dalio and just about every major investment player in the world uses a stock bond strategy. In fact, many of them are using leverage. So they're not just using a one-to-one leverage like we are, which has allowed us to be relatively unscathed. Right now, we're down 3.6 in our full program for March. And in our basic program, we're down 7.6. Okay, so this is a year when people are down 30, 40% so far. And even the greatest investors of all time are taking a big hit. Now, I'm still highly confident in this trade because once again, it's either the entire financial system collapses in the next, really this week, or the Fed must intervene and protect the US's most treasured asset, which is again that 30-year treasury, which every fund manager in the world uses to protect their portfolio. In fact, a very popular strategy in Europe is to borrow at a negative interest rate, hedge against downside risk on the dollar, and buy up treasuries. And so that sell-off has caused so many people to have a margin call that they're estimating it's about a $13 trillion margin call, where people are trying to convert whatever asset they have into cash. But the problem is there's just not that many dollars in the world to fill those positions. So because our whole financial system is based on credit, it's not designed to have every asset sell off at the same time. So it's a beautiful attack. The solution will be to massively print more money than we've seen in history. So they're currently going to have to increase credit lines from the Fed to all the central banks, not just the big four, which we currently have. And the Fed's going to have to come in and aggressively support our treasury market. So I do believe that's what comes next. And if that's not enough, I'd expect to see them cut interest rates to negative bound. Now, overnight, they've been doing a lot of things. Now, broker dealers can, instead of selling their stocks for cash, they can put it in a repo market, just like the primary dealers are doing with treasuries. Now they have that available for stocks. So that will help slow down the stock crash, but I don't think it will save it. But it will help free up more dollars for people who want to take a loss on whichever asset they're selling and then go into cash. So the big picture is we're out of dollars. Too many assets crash at once. There's something like 13 trillion in necessity for dollar availability, and there's very few dollars available. And even if you look at the Fed's balance sheet, it's only at $4.5 trillion. So there's just not enough dollars out there for this, what's occurred. So if you are an existing member, you know that you should not own equities. We've told you to get out of that since early February. We're waiting for this crash to go far further. I'm looking at the benefactor, the beneficiary of the $850 billion stimulus plan we just put forth yesterday. And so that'll primarily be healthcare, biotech, and medical device companies. But we also have a look at a aerospace defense ETF and a e-commerce ETF as well. So that's something we'll be rotating into once we believe the bleeding in the stock market is over. Unfortunately, I think it's going far further in the very near future. So that time is not yet. If you're an existing member, we've made no changes today. And if you're a pro member, the only new addition was to add one put option, which you have in the previous. I'll just show it for those of you who are following, just because today is an abnormal day. So it's the per 100 shares of the TLT. We did add in the April 17th, 2020 long put option. So we bought to open one put option per 100 shares of ETF. This way we can rest assured for the next 30 days that we have a limited risk in our TLT position. We can be patient for the Fed to come in and get control over its bond market. Now, if you're a new member, good timing for you. You lucked out. You can actually jump in to our exact positions at a discount. So this will put you at about a 10%. Let's see what this total adds up to. This was the value of these options this morning. They're probably down a little bit. So you actually get in even cheaper than this. So it's going to cost about 10% of the $30,000 will be at risk to enter this position, but it gives you trading and profit opportunities for the next 60 days. So you'll have two call options on GLD, which are the 158 expiring April 9th and the 158 expiring April 17th. Plus, you'll have these 6 TLT call options, which expire essentially every Friday from here, which I do intend to hold to expiration to close out each of these. Here's our current return. It's a bummer, guys. We're up 15%. I wanted to close those out. I got greedy, held on to it. We made the right forecast for the stock market, but again, I didn't predict that this would put huge players. Okay, the only people who play the treasury market to the extent that they could cause such a sell-off in a 30-year treasury product are massive, massive central banks and hedge funds. So some big players are losing fortunes, and so we're down 7.7 in March, and that's all in those call options. So we really have no equity position and are just waiting for those to head back up. Now, the good news, again, is that we have expirations for quite some time. So we're not in a huge rush to liquidate those positions. And the big picture is if we don't get a hold of the bond market, then the entire US government's unfunded, and we're going to be in Mad Max territory in short order. In the Pro program, we're down for the year 2.26%. We were up as much as something like 12% on last Monday, not this Monday of this week, but the previous Monday. So now that does not include the bootcamp QQQ put, which I believe will actually offset. If you're following in the bootcamp and you do have that QQQ put, you might be close to break even or even profitable. But once again, I'm highly confident that the Fed's not going to cease to exist and will do what it can as long as it can. And the next action will, again, for it to aggressively ramp up quantitative easing and to likely bid up all these treasury products. And this will let all the big players who are now underwater on their bond positions to get out for some sort of a profit and reduce all the losses that they're seeing in probably every single position they have except for shorts. Now the buy and hold portfolio is doing really well considering. So down 1%. Now this one had no exposure to the option market. So when our predictions are going right, you wish you have those options. When they're not, then obviously the buy and hold just looks very attractive. If you are following the buy and hold, no changes yet. We're still 40% in cash, ready to buy equities. And I think that time is coming in the next 30 to 90 days if we continue to crash at this pace. And as well as the pandemic growing as fast as it is, with Americans really not listening to the isolation measures. And so I do think we'll see it continue to rapidly grow exponentially, and that will soon be in lockdowns. So probably that'll be peak panic. And shortly after we go into a countrywide lockdown where you really can't leave your house, that's when I'd suspect is about the time to buy equities. People will be really, really scared by then. Okay, so that's a review of our positions. I'm gonna look at a few charts and then I'll do some Q&A. Okay, so here's the SPY. Now, remember, we were catching on to the risks when China's stock market crashed unexpectedly. And that didn't make any sense because we had originally signed a trade deal with China, and it was really good for both parties. We were going to help finance their Belt and Road Initiative, and they're going to reroute $200 billion in orders to our country. Now, Trump still swears by the relationship's fine. My bet is that it's not. And if you do look at what the United States was trying to get China to do, the phase 2 trade deal, which we were going to punish them with tariffs until they signed it, would have really crippled China. And so President Xi had a famous quote that I'll never forget. And this was leading into the phase one trade deal. And he said, now we begin the long march. We must start all over again and rebuild everything, which insinuated that he was ready to decouple with the United States, even if it meant taking some pain. So that's why for most of 2019, I was highly skeptical that a trade deal would be signed. And what's even worse about this whole timeline is that China knew about this pandemic virus spreading, whether it's on purpose or not, perhaps doesn't matter. It does look like from their propaganda wing and from what Russia's doing that they are trying to destabilize Western financial markets and dethrone the dollar. That does seem to be the end goal, and to set back America as far as they can, as I do believe they want to take the lead as a world power. So China knew about this virus spreading. They threw the whistleblowers in jail who tried to warn the Chinese about it. And they really covered this up until it had already become massively spread in China. So around January 22nd, they started alerting the world. And by then it was too late. Tens of millions of people were flying in and out of the epicenter. And now we've seen this just spread everywhere. So I do believe we'll see the US blame this on China. They'll wait for them to fail to meet the phase one deal. And the bottom line is that China was never going to give up its government structure to appease the United States. And so China's whole strategy is to work as one unified group instead of as our democracy and capital structure works here in the United States, where you got all these little companies competing within one another. In China, they have a different approach, and that's really to just take all the resources and all the labor, tax it at 70% rate, and then redistribute that wealth to the common good. So that turns into a lot of free stuff for all this labor, but it also allows them to laser focus all of their country's resources and economic power into some very valuable industries. So those are 5G, AI, the phone market, just to name a few. And so if you have a $13 trillion economy, putting every penny it has into those core sectors that are going to be extremely important in the future, a small company like Apple or Ericsson, they just don't stand a chance against that kind of power, especially when they're out stealing all your secrets. So I do believe that this is the first step towards more aggressive actions against China and Russia, for that matter, as soon as we can stabilize our markets and get enough ICU tents built to care for all these people. So who knows where the bottom will be in stocks, but again, the 2008 crisis was a 50% decline, and that's peanuts. That's absolutely peanuts compared to what we're dealing with this time. So until the Fed actually says they're going to actively buy stocks themselves and not put the risk on these broker dealers with the current repo setup they just put out, which is only 90 days, I believe stocks will crash considerably further than 50%. And I'll do questions in a second, guys. Almost done going through a few charts here. Okay, so that's the outlook on the stocks. Again, it all started when Chinese stock market crashed for no reason, and we started digging into this virus that's spreading the world. TLT, my prediction is that we're going to be headed into massive QE to bid the Treasury market up, and that is a necessity to fund the U.S. government's needs to fight this crisis. So it's going to have to pull resources from stocks and pull it into the bond market. So my predictions for TLT remain the same, that we will be at that 180 level again in short order, and then blow past that as the world goes into negative interest rates, lots of QE, and the governments have to do massive fiscal spending to bail out everyone. So it sucks to see this downside. The simple explanation is, again, people didn't just lose 10%, 20%, 30%. People who were using strategies that worked for the last 12 years, simply selling put options, are down hundreds of percents, so much more than they own. And this is causing massive liquidations of all assets. So that's why you see stocks and bonds selling off at the same time. Corporate credits down, high yield credits down, gold's down, silver's down. The only thing that's in demand is the dollar, which there's a massive shortage. And so again, I do suspect the Fed will have to pump so many dollars. I think they need to pump something along the lines of $5 to $10 trillion into the financial system immediately, just to stop the margin calls and allow people to get out of these positions. So that's still my prediction. We have a 30-day put option in case the timing's off that absolutely protects our largest position. And in our call options, we have a lot of time premium. So lots of time for the Fed to come in. And again, that's the one asset that they can manipulate at will is that treasury market. Here's a look at the US 30-year yield relative to the 30-year bond in Germany. So again, this is totally abnormal. If you know there's an economic slowdown ahead, the go-to play around the globe is to buy government bonds, especially the long end, because they cut rates. That allows these primary dealers to borrow for cheap and buy these treasuries for a guaranteed profit. And as they pile into these and the Fed keeps lowering rates, it has the effect of appreciating the value of the bond. So this is their go-to playbook, and it's really their only option at this point. So we're seeing a bounce in yields in all bonds as people are just liquidating everything. But my bet is the next move is a big push to the downside in yields. Here's the longer term relationship between these two countries and their 30-year product. So the German bond has been a great leading indicator because they're so tied to China. And so you can see that little bounce, but the big picture is these yields are headed lower. And again, I have absolute confidence that governments worldwide will be cutting rates to negative and doing massive QE buying on the whole spectrum of their treasury. So they did announce that Sunday, but it's just not enough. They're doing it so slowly that people can't get out of these positions who need to. And so we're getting a bit of a bounce as people are trying to liquidate. Last chart, this is really what pricked the bubble and continues to. Now in our precious metals tab, I have added a spot for oil and natural gas. At some point, that will be a heck of a buy, so I can't wait to pick that up. And again, as soon as the stock market does crash much further than 50%, we're looking at really 4 core ETFs, which is a healthcare ETF, a biotech ETF, a medical device ETF, and then an e-commerce ETF and a defensive ETF, assuming that we'll soon be at war with China and Russia. Okay, so let me go ahead and pull up the trade doc again and go into Q&A. I'm going to start off with the chat boxes, and then we'll open up mics after that. So hold the audio for now, right?
Hey, Jason, I also sent you an image on Telegram from Michael Seebeck, so we could run through that once we get to the next session.
Okay, I'm looking at his photo. Let me catch up on these and I'll look at his photo in 1 second.
Sounds good.
Okay, Frank says, does the TVIX have a risk of falling sharply? Is likely to keep increasing? You know what, Frank, I'm not going to comment on that. I am not an expert at that. So my expertise is the relationship between the stock and the bond market. And that's a full-time job. Trust me, it's just tracking tracking one part of the treasury curve is a full-time job. So that's really my expertise, is that 30-year treasury and its relationship with the government, the banks. But yeah, bottom line is if you want to bet on a stock crash, the best way to do it is with the bond market. Julio says, just signed in for the buy and hold. Do I buy the TLT, GDX, and Yang now? Yeah, you're coming in at a great discount, Julio. Let me reiterate how to do that. So per 7,500 bucks, you'd have 3,000 in cash to buy the SPY. But again, I'm not going to buy the SPY. I believe many industries will be on life support for the foreseeable future due to this pandemic's ability to, it's not necessarily wiping out. The problem isn't the mortality rate. It's the amount of people who have respiratory failure and need hospitalization. And that percentage is gruesomely high, especially over the age of 40. But even under the age of 40, 5%, and I'll pull up this chart in a second, guys. This will, but yeah, so Julio, so the instructions are 10 shares of, for every $7,500, you'd own 10 shares of Yang, 20 shares of GDX, 20 shares of the TLT, and you'd have $3,000 in cash and another $440 in cash. So that 440 is earmarked relative to the Yang position, and the 3,000 is earmarked relative to the SPY position. And Dean broke it down for you as well, so that's good. Frank asked about the VIX. Yeah, I'm not an expert at that, so I prefer to bet that the Fed's going to cut. I think the whole world's going to cut rates to negative and aggressively support their bond market because governments need to spend a ton of money they don't have. I mean, think about it. How's the government going to pay for all this stuff they need to fund? They're not even collecting taxes. Everybody's doing tax holidays. Everybody's getting laid off. So there's no tax money. So companies you can count on crashing because their profits are going to just crater. The government's not going to have any tax receipts, so they have to figure out how to fund it. So the central banks can manipulate the value of bonds quite easily. The cost is it can turn the value of their currency to depreciate. But if everyone's doing it at the same time, then it's just a wash. So if everybody devalues their currency, prints money, puts it into the government bond market, then eventually you end up with inflation and back to the 1965, 1980 scenario. So I think that's unfortunately where we're headed towards as soon as all this money does work its way through the system. Dan O'Connell says, how will the Fed help us accomplish our target? Really easy, Dan. They're going to come in there and buy treasuries from everyone selling. And they can do that at any time. That's actually the one thing they can do is they can buy treasuries from the open market, not from the treasury, but from the open market, which is where the problems are. That's one. And then two, they can cut interest rates. So that's the only two things they have the power to do. So unless you think our central banks are trying to end America, which would be quite a plot twist, huh? Our own banks trying to end America themselves and destroy their banks in the process. Or, that's one, if you think they're trying to just end America themselves, then you don't want to own the TLT. If you think the banks are going to do everything in their power to try to fight this, then that's all they can do. They can cut rates and they can buy treasuries. So I anticipate they will do that very aggressively in the very near future. In fact, in the pro membership, I'll be, after we've given some more time for people to get wiped out here, I'll be very happy to rebalance and make sure I still have no less than 40% position in that TLT ETF. So I'm highly confident. We'll give it a little time to play out here. Michael Seebeck sent me a picture with his positions. What was your question on that, Michael? Is there?
All right. Can you hear me, Jason?
Yes, sir.
All right. So I was sitting here watching charts on Monday and saw the rise in the TLT and put in some sell orders, which got filled for pretty much the highs on Monday. So on Tuesday, I saw an opportunity to come back and repurchase the May 20 or May 15 calls, 163s at a discount. That was a discount, but I thought, here we are today, it's much lower. But anyway, so I'm holding those two now. And then I have got the GLD call, which we're down a little bit. But basically, I just need some help following the system. Kind of like maybe one or two of the other subscribers who aren't following it to the T. But anyway, I just wanted to show you what I have, what I'm in right now, and maybe you have a recommendation about
Sure.
what to
So I
follow.
could tell
Yeah.
what I'm hearing from you is you want me to say, hey, I'm still confident in these trades and should you build the position? So yeah, the trade alert today says extremely confident
Mhm.
and to rebuild the entire position set. So I would fill in the gaps in anything you're missing. And so good question, and happy to give people that feeling of confidence. So yeah, if you have somehow gotten out of any of these positions prior,
Mhm.
I would get back in.
Okay. Thank you.
Okay, because if they don't save this, here's the risk reward. Okay, so this entire position, if for a pro member, is about a 5% loss or less. That's a 4% loss. So if these went to zero, so if you're in a pro program and these all went to zero, your total loss on this portion is about 4%. Okay, but what can we make on this? We can make 1,000% plus on all of these trades. Now, probably not the one expiring on Friday, but you never know how aggressive they'll get. But the bottom line is I like this risk reward, and you can get in at a big discount today. So highly confident in this position. Again, I'm not telling you to take more risk than I am, but I still believe this is an appropriate amount of risk.
Mhm.
So if we had 40% of our capital following the equities, and that's currently just this set of call options, that means you can lose about 4% total of your account. But the potential return for us is 5, 10, 15% easily in terms of total return.
What would your comment be if one were to say, I agree with the March 27th through the 619 and just not get back into that 320 position?
Sure. I'd say my least favorite one on there is that 320.
The Friday expiry. Okay.
Yeah.
Okay.
But I will say this, they have to intervene quick. If they don't intervene like now,
Yeah,
this whole thing goes down.
absolutely.
Now, maybe they're letting the yield, they could be letting the yield rise to just kill every other market out there. Because imagine if the TLTs now has this really attractive yield. So bottom line is we go back to the big picture. What's the problem? Private sector is just going to get demolished. It hasn't been demolished yet. Okay. We haven't even seen the pain yet. Layoffs are just starting. Social distancing is just starting. Look at South Beach, Florida, in Miami. You got 10,000 people out partying still.
Mm-hmm.
Okay. So private sector is going to get crushed. Banks are going to get crushed. Who's going to bail them out? The government has to bail them out. So how are they going to do that? Well, not with tax receipts. No one's working. We just gave a tax holiday. Okay, so we have to raise it through the bond market. Now, when you realize there's limited resources in the world and in the economy, and you can't just print money out of thin air without having a negative consequence in another market, then you realize they have to pull these resources. So the central banks must force all resources to fund the government so that the government can redistribute the wealth to bail out key industries, keep the labor markets alive. So yeah, highly confident that this trade will work. Now, the risk management's important. Look, if you guys had not been listening to the risk management and say you did like 3 or 4 of these call options, and instead of having a 40% TLT position, you had 100, you wouldn't be, you know, you wouldn't be sitting on a relatively flat return. I mean, what's the big deal? We're in the biggest financial crisis of all time. If you throw in my QQQ put option, you're probably up this year still. And that's when we predicted the stock crash correctly, but Ray Dalio got a margin call. So if you follow the risk management, you're really not too concerned right now. If you've been overly aggressive, then you have a little more pain than I do. But again, that's why we keep the strategy conservative with risk management. I'm climbing back up to the chat. Karen, President's on now. Yeah, I think President's just going to slowly but surely tiptoe his way towards a nationwide lockdown, because these idiots are just, they're not staying in. So it's just going to keep spreading. And I'm going to pull up some info. I'm going to show you guys the Bible of the coronavirus, which is, I believe, the report that the government is responding to. Jim Willis says, what about the calls expiring Friday? Should we dump for loss? Nope. If the trade alert doesn't say it, then trade alert doesn't say it. Steve Lane says he's not happy with his pullback in the TLT. Understood. Craig Bartel says, can you elaborate further as to why the Fed has to buy treasuries? Right. So Craig, so every big money manager, a huge amount of big money relies on that 30-year treasury to generate profits and to hedge their equity portfolio. And so if that yield rises, so you got to realize there's trillions of dollars stuck in these treasury products, and they, for the most part, bought at yields that are not very good. So they're really all counting on, and this is big banks. This is central banks, primary dealers. There's a good amount of it sitting in all of our IRA and 401ks. So if those yields don't go lower, then everybody's holding a loss on the underlying bond and is incentivized to sell it and get out of the way and then buy it back for a better yield. So this would be an absolute nightmare for yields to rise right now. So again, the Fed has 2 tools. One is to cut rates. The other is to buy treasuries. So I anticipate them doing both of those aggressively. William says, am I supposed to sell the GDX shares? So it definitely did not say to sell the GDX shares. DD says it's going to blow my mind if the TLT shoots up, as you say. If a TLT doesn't shoot up, as I say, you've got bigger problems to worry about. So I'm still highly confident in the grand scheme of things that it's going to very, very low yields. Michael Seebeck says crude oil hit 23. Yeah, that's really the pin that pricked the bubble beyond all the equity selling off. So this is detrimental for sure. Steve Lane, a few musings. We are actually crashing. So in a sense of figurative end of Western civilization scenarios actually playing out. What I have found more curious about this is that flight to quality in financial markets has revealed the true haven asset of all, the US dollar, as very interesting insight. No one is flying to the yen anymore, or the Swiss franc or gold, or even US treasuries. Everyone's a cold hard dollar bill. With Benjamin's face, if possible, that fact is worrying me a bit because it's upending a lot of long-held established correlations between assets that have been broken now. The fact that liquidity in US treasuries is drawing out is very worrisome, folks. No one wants to part with their stash of dollars, not even buy US debt, which is the de facto risk-free investment. Very well said. And that's exactly why I remain extremely confident in this trade alert. Well said, Steve. Malvis says, why is the TLT crashing? We have 3 days until the 20th. I feel you, Malvis. The big picture is that relationship, which Steve was pointing out, broke. People who are using 3, 5, 10 times leverage, the they got caught with 2 positions, maybe 3: oil, bonds, stocks. Okay, and then from bonds, you can crack that into, we've got foreign sovereign bonds, we've got US foreign bonds, we've got foreign high yield corporate debt, we've got US corporate debt, we've got the investment grade, and we've got the junk bond grade. So the bottom line is every single thing sold off at once. It looks as though it was a coordinated attack. And so anybody using leverage went below zero. So if you had let's say you had a $10 billion portfolio, suddenly you're in a position where you might be not at zero value. You could be at -10, -20 billion dollars. Go look at somebody like Deutsche Bank. Their derivatives book is in the trillions. So simple explanation is people are getting wiped out. Think about, here's probably the best thing to think of as we weather this storm. You guys all seen Forrest Gump? This is Jenny boat. All right, so there they are in the storm, and this is going to be us. Won't play it. Okay, so everybody's getting blown out. They're using leverage. They're using risky strategies. They're greedy. And they're not going to be able to hold their positions. And so I think right now we're just seeing everybody get out. Like Steve said, they're trying to get to dollars. From what I've read, there's about a $13 trillion margin call. But keep in mind, the Fed's balance sheet only has $4.5 trillion. So we got everybody clinching onto their dollars, everybody trying to sell. There's no money in the banks to cover all these sell orders. So the Fed's going to have to pump a ton of money into the system. Trillions and trillions and trillions of dollars is what it will take. So I believe we will be, because of our intelligent risk management, again, people are getting blown out. We're down a little bit. We got that put on the TLT, so we're not even down this much. We got that QQQ put in the boot camp. That thing's up a lot. So we're barely scratched. And my anticipation is once everybody's done selling and getting all their margin calls out of the way, the Fed's going to do what it is allowed to do, and that's cut rates and buy treasuries. And so that'll just rocket higher, because the big picture is we have to pull resources to the government, and the government has to redistribute those resources to the injured industries and finance a massive healthcare bailout to civilization. And so we're in the middle of the storm. We're in the middle of the storm. That's the bottom line here. Let me get through some more questions. We got 16 new messages, so I'll go back to the top and then we'll start looking at more. Tony says, would you add the 320 call with expiration? Yeah, I like that bet, Tony. I think they need to come in there and save the day, but they may not do it today and tomorrow, but they need to soon. So if there was one I would skip, that would be the one I would skip. If you're missing any of those other positions, then I would put those on.
I unmuted you, Tony, if you're there. I know you had a couple questions in the chat.
Okay, yeah, I read Steve's. Oh, you posted that. Okay, Julio says, when you buy, do you select limit or market? Well, Julio, there's two options. If you want to get the best price, I would go for the mid price with the limit order, maybe a couple pennies higher than the mid price. So if you take the bid and the ask, divide by 2, add a couple pennies. If you don't get filled, cancel the order after a few minutes and resubmit. But if you want to just use the, if you want to just reuse the market order, you can get filled instantly, and you may spend a little more, but then you don't have to mess with it. In my track record, I always use the asking price, which is the highest price possible. So you probably get less than me, even with the market order. Tony L says Jeff Gunlick sold his gold. No, that's not correct. He sold his GDX. He thinks gold will go to new highs because of all the money printing. He likes GDX. He had it. He sold it in the last run up because he says gold miners, even though oil is cheap and gold is high, he says the gold miner ETF lives in stocks. So he's more inclined to be on spot gold. So I did listen to that presentation. It was a great presentation yesterday. Absolutely wonderful. Really showed you how messed up everything is in the markets. Ron Steger says, "Hey, Jason and Dean, I am a new member. I've got 75K to put to work in Ameritrade. How many GLD calls should I have in my account?" Very good question. So I would take that 75K and realize only 30,000 of that is designed for today's trade alert. So you would only own one of each of these trade alerts, Ron. The other portion of your portfolio should follow the put option that we bought today and TLT ETF itself. So to follow our program accurately, you would pick up 40% of your total account into the ETF of the TLT. You would buy, and this is for pro members. So if you're not a pro member, just realize that this is not for you and you won't get support on it. I'm doing it for Ron because today's a great day to get in. So you'd pick up that 145 call option, put option we sent out to protect per 100 shares of TLT to get that part of your portfolio filled. I'd only do that part today, Ron. So if you're confused at all, maybe just do the call options today and then fill the rest of your portfolio tomorrow. In fact, I'd say that's a good idea anyways, just to see if we get any more pullback in the TLT before the Fed intervenes.
I unmuted you, Ron. If let us know if that answered your question.
Yeah, it did. Thank you very much, Jason.
You're very welcome. Brian says thoughts on UUP. It's just trying to understand what's going to happen on the 30-year Treasury, which is just one product in our U.S. bond market, is really a full-time job. I mean, you could spend 10 hours a day just understanding all the complex relationships on that single asset. So I'm not going to be commenting on assets that are not part of our strategy because I haven't put the due diligence into it. Mike B says, I was approved for option trading, but I had a few trading violations. So if I take my position out of TLT now, I'll have to wait 2 days to reinvest in options. Should I just stay put to avoid missing a jump in TLT, or should I pull out, wait 2 days and reinvest? Yeah, so my endorsement has been to stay put the whole time and to follow the trades when I do. So I'm long that set of call options and will most likely sell them near their expirations. Coley, with the potential of S&P 500 dropping 50%, why are you not recommending a SPY put? Well, so in our boot camp, we bought a QQQ put a long time ago, and it's up considerably. For the general reason is because the VIX is so expensive, the cost of a put is really outrageous. So I think that opportunity is not as attractive as it was a few months ago. But really, if you bet up on the TLT, you're betting down on the SPY. I know we lost that correlation for a short period of time, but I don't think that will continue. Steve Lane says, thinking like Andrew Jackson on his thought. Yeah. You know, I don't like the central banks either, Steve. So Andrew Jackson tried to shut down the central banks. And so, yeah, here's the big story here is corporations took advantage of the corporate bond market for the last decade. They borrowed every penny they could. They bought their own stock, which reduced the amount of shares outstanding, drove the price up, and then as an insider sold into that. And now that their stocks are crashing, they want the Fed to bail them out, which is now happening. So yeah, now the corporations and the banks are getting bailed out. I think Boeing spent like $30 billion in stock buybacks so that its insiders could get rich. And now they want the government to bail it out. What a crime. And they will. So yeah, I think at some point we'll see a big revolution. If the TLT goes down, the banks go down, the whole thing goes down in flames. So we got the put on there for our buy and hold, or for our pro members. And I just don't see that happening right now. We're not even in a lockdown. We're not even in peak panic. Okay, William says, will we let the March 20 calls expire worthless? Well, they're not worthless, but we will sell them on Friday. Craig Bartell, are there any other scenarios which would take down the TLT? Well, yeah, so TLT has about $800 billion in the 30-year treasury. And that asset is just a normal asset where there's supply and demand. People are buying and selling. And so if more people sell than there are buyers, then it will make the yield rise. And so if a lot of people try to sell at the same time, you can see volatility in this product. But you just got to remember, this is the product that the Fed can manipulate legally. And my anticipation is that they will in very, very short order. So yeah, what would really destroy the TLT? Well, it'd be if the Fed raised interest rates. So that would mean the Fed was trying to drive yields higher. And right now, you know, what has the Fed actually done? They've been adding liquidity in every way, shape, and form possible. And they've been lowering interest rates. So that's really what we want for this position. So the Fed's doing what we want. Doesn't look like there's some sort of plot twist where the Fed's going to try to end America and kill all the big banks that own it. So I don't see that happening. Okay, we got some more questions popping up.
Let's go to Perry real quick.
Okay.
You out there, Perry?
Sorry, I had to unmute. Yeah, Jason, a while ago you showed the spreadsheet, and I saw some information on there that I would like to go back and look at just to compare to my account. I'd repurchased some of the TLT calls, and I just want to make sure that what I've got, that I paid for it, wasn't a whole lot more than what we paid for it originally. So hold on just a minute, and I can take a screenshot.
Sure. I'll just leave that up too. So this is our, let me zoom out. Well, I guess that's pretty good, but
Yep.
I'm going to go down so there's only open positions left. Okay. And
All right.
I'll just leave that up for everybody. So this is our open positions in our portfolio on the option side. Now remember, there's one missing that's only for pro members. Well, two now. So you have a a call and a put that's not in here. Now this put is still open. This one's up quite a bit. 1,250% on that EEM put. Still holding that. We got a long time for that one. So that's covering some bases here. But yeah, here's our open positions. This is what it was at a few minutes ago, but it did go down $1, so probably down a little bit more on those.
And that column next to that's what we paid for it, correct?
This is what I got in for, and this was the current value before I did the screenshots today.
Now I looked on my Google while we, during the webinar today, and I can see the spreadsheet, your spreadsheet, but I don't know if it's updated. Does that one stay updated if we go in that way through the Google Docs?
Yeah, this one's live, so you can see it real time.
And you just go in through Google to see that, or your website?
This link right here is in the trade alert. I'll post it in the chat too. Now I'm getting this programmed to automatically update the value of the options right here. So right now that just gets updated once a day.
So
And
what
Mike-
tab are you on right now, Jason, showing that?
The SPY tab.
That's what I was thinking.
Okay, Mike B said interest rates are close to zero. So yeah, so Mike, the idea is that, okay, if I'm a primary dealer, I can borrow from the Fed for zero and buy a treasury that pays something more than zero. So I have a guaranteed profit. So it's going to incentivize banks to buy treasuries. Then the Fed's also got the repo. So get this sweetheart deal for the banks. Step one, borrow from the Fed for zero. And that's only for primary dealers. All right, that's nice. What am I gonna do with that money? I'm gonna go buy treasuries. Okay, so I'm gonna buy those treasuries. I'm making money already because it has a positive yield and I have a free loan from the Fed. Can't beat that. Okay, so that's step one. Step two. Step three, let's make some more money. I'm gonna go now give this to repo. So Fed's gonna take the treasury back from me now and give me cash, which they now have at $1 trillion availability. So now I can go take that money. So I borrowed from step one, I borrowed from the Fed for zero. Step two, I buy a treasury for a positive yield. I'm making money. Step three, I loan this to the repo market, to the Fed, and they're going to give me cash. Step four, I'm going to go loan this to the primary dealer for an interest. So that's a pretty nice deal for the Fed, and it incentivizes investment into treasuries. So I just, why are we not seeing the results yet? People are just getting, this storm is so nasty. Boats are going down. So they're just selling everything so they don't go into, so they don't owe money. So they don't go into negative territory. So as soon as the storm's over, I do suspect we'll be something like this where we're catching all the shrimp because there's no one else left standing. Angelica says some conspiracy chatter for you. Some think that the virus was released to bring down Trump in the US in order to usher globalization and a new world order, one world currency. Yeah, I'll add to your conspiracy there right before. So first of all, they did this phase one trade deal while throwing doctors in jail who are whistleblowing that there's an epidemic breaking out in China. So a lot of people think that for sure that this potentially was done on purpose by them. So one, two, they signed that trade deal knowing very well they wouldn't ever be able to fulfill it. Three, they've reported BS the whole time about how bad it is, saying it's 3,000 deaths. That's a joke. Plus we got Russia crashing the oil market, and it's all happening at the same time. And also China came out with a digital currency, and now they're going around burning all the currency in their country because they're saying it's got the virus on it. So China's control over their population has become dramatically stronger through this crisis. Malva says, what is the ticker that shows how much corporations pay to borrow? Is that crashing as well? Yes. So you have two good ETFs for that, Malvis, LQD and JNK. Both are crashing. So that's your investment grade bond fund and your junk bond. And yes, everything's crashing. Liquidations across the board.
Hey, Jason, one comment on that digital currency. By getting rid of the cash currency, the physical cash currency, it forces everyone to use a phone that is attached to their name, so it's attached to their funds, so the government can more closely track and monitor people. Because you can't just have a burner phone that's got access to your money. That doesn't work.
Yeah, it just adds to their power. So you're seeing the benefits of a communist dictatorship. It really shines when you have a pandemic, doesn't it? Look at Western society. Oh man, they're running out buying guns and booze and partying. So William McNeely says, should I buy the put option with my cash account? Yes, it doesn't matter which account you do it in. You definitely want to have that put.
Hey, Jason, I posted a link in the chat box I saw it last night, Ray Dalio, How the Economic Machine Works. And it's actually Ray himself giving a lesson And while it sounds simplistic and the graphics to go with it are pretty straightforward, it really is very educational, especially when he gets about 3/4 into it and he starts talking about how the Fed and plays into it in the printing of the money and the selling of the treasuries. And so I thought that was really educational. I think that probably ought to be required viewing material for all members, including trial members, because it really is quite fundamental and foundational to what you tend to cover in almost every
Sure.
single
Oh yeah, yeah.
one.
I've seen that. Post it again and we'll share it with the group. Let me pull up
It's posted in the chat box right now.
I'll grab it.
okay,
okay.
Ryan will post it. Yeah, he's got a lot of
It's
good
only 30
content.
minutes.
So the only reason he got caught off guard is because he was using leverage and didn't believe he thought he didn't know what to do with a lot of people didn't believe that this virus would spin out of control. I'm going to pull up something that's really interesting for you guys. Let me grab this.
Malvis had a question. What is the strike and expiration of the TLT put?
Here's the TLT put. April 17th, 2020, the 145 put, and that's designed to protect your TLT ETF, not your call options, but rather your underlying assets. So for pro members, this was the alert we threw out to give us a little more of a safety net while we wait for the Fed. I think the bottom line is they're going to let everybody bleed out, just try to keep the markets alive, and then aggressively bid it up. So the timeline on that we'll see play out here in short order, but they need to do this sooner than later. Okay, so this is a link I'll post to everybody. It's quite long. And what was interesting is that at least half the people they're finding with the virus have no symptoms. So it's essentially, and it looks as though it infects about 8 out of 10 people. Now, because it's spreading without symptom and infecting 8 out of 10 people, and it does seem to be airborne, not just from coughs, but just from breathing in a still room. This is basically impossible to stop. And so different countries are taking different approaches. In the UK, for example, they're talking about just letting it burn through quickly. So just have a horrifying 3 months and your population's now has herd immunity, and you get through the economic downturn quickly. Other countries are going into lockdowns and they're having success, at least in the short term, slowing the growth so that less people die. But the second they open back up, will the virus keep spreading? And probably yes. So there's no easy solution to this. Here's the data that's, so the bottom line is you get all of these people who are less than 30 years old who just don't give a flying, you know what, they don't care about this at all. They're not going to change their ways unless they're forced to. And they just don't think it matters. So, and that's even what's interesting is 5%, even at the youngest age group, are needing critical care. Now, if you're over 40, that's when the stats get really problematic for society, because now all of a sudden you are going to have 6, 12, the older you get, almost guaranteed that's going to put you on a ventilator. So people dying is really actually not a problem for economics. If they die, we don't have to spend any more money on them. They're out of the way. It's the people who need hospitalization, who we're trying to save, that are going to cost a fortune. And so in China, we saw what they did. They just literally welded people shut into apartments, and they just don't care. They're just letting them die off.
It looks like trading is halted. We're down 7% on the SPX.
Oh boy. But in Western civilization, we're going to do our best, you know, with democracy and all these old folks control the vote. Well, we're going to do our best to take care of these folks. And so that's the underlying problem. So you got the immune group not caring and not having a legal structure that will force them to stay in. Now, I do think we'll start using emergency powers in some way, shape, or form to slow this down, but we're not quite at that moment where it's bad enough yet. I think quite soon it will be. But yeah, so the younger spreading it like wildfire, barely bothers them. They pass it to their parents, and the parents pass it to the 50 plus crowd, and the 50 plus crowd's not coping well. And again, who cares about the death rate? We're concerned about the hospitalization rate. We're going to need millions of ICU beds or tents. It's going to be tents, not hospitals, to take care of all these people. And so it's just going to be a long haul. It's going to be 2 years of having to stop and pause the economy to try to deal with the spread of this virus. And it's going to be economically devastating. So will there be a few benefactors? Yeah, a couple. But in general, you can count on economic slowdown, which is why you want to bet up on bonds. So if private sector's hurt, GDP is going negative, we know what the central banks will do. They're not going to cease to exist. They're going to cut rates and buy bonds. So that's exactly what I expect to happen. Angelica says, if you notice China's numbers, they say, yeah, China, oh, and their propaganda arm now, man, they are sitting there making fun of the United States, teasing them. I bet they start blocking supply chains. So.
Angelica, you are good at reading between the lines. I have to say, very good on you. Awesome.
Do you have a question, Kathy?
I just posted VIX is close to 80. And I know you've been looking for it to go to 100.
Yeah, I think 100 to 120 now will be maybe when I want to start selling puts to get into our, let me show you guys what I have in the works for. So yeah, so guys, let's just think about things, okay? Everything selling off doesn't make sense. Okay, they can't let that happen forever. We're trying to be the sailboat still up when everybody's down. And we've positioned our portfolio so that we can weather the storm. So most people are down 20, 30, 40%. We should be up a lot more. It's unfortunate that some big funds got blown out. That's my fault. I should have realized that this was such a devastating crash in so many asset classes that we should have had the put protection. We should have took profits. So that's my mistake. I had told everybody, look for a pullback in the TLT before a big jump. I didn't anticipate this big of a pullback. Otherwise, again, I would have took profits and bought us puts. So we're successfully weathering this storm. Big picture remains the same. We have not touched our positions. If you're new, highly endorsing the same positions. If you're looking for confidence today, I have extreme confidence today. So that's the big picture. Let's look at some opportunities. We're going to be in a situation where we're going to make the easiest money in the world while everyone else is running for the hills. So let me show you what I've been working on so you can see what we're going to rotate into. So as we start selling those call options, hopefully for profits, that cash is really earmarked to, and again, with all those call options, again, if I get 100% loss on all of those, which I doubt we will, you're only losing 44% if you're in the pro program or 10% if you're in the basic program. Here's what we're looking to rotate into when the time comes. Now, not all of these at once. I'll be timing it based on the funding bills that are getting passed in Congress right now. Okay, so if we realize that there's only 100,000 ICU beds and only 10,000 open, and we're going to need no less than 300,000 immediately, probably more like a couple million. If we really want to house all these people in these tents. Oh, could you see the, oh, okay, good call, Mark. Yeah, and those might be really old members too. I think that's like from years ago too. So did you see that note from Mark Ryan to edit out that little piece where I had the member names on the screen? Good point, Mark. Thank you. Here's the sectors where, oop. Okay, so healthcare is, these top companies are just gigantic. This is where a lot of our capital will most likely be allocated. I have 35% set aside for that and 35 set aside for e-commerce. So that's primarily Amazon and Alibaba, but a lot of different e-commerce. So if we assume that the world's changing for the better part of 2 years while we race to develop vaccines, and that we're not going to have herd immunity for at least, unless we just do the fast burn, which I don't think we can withstand, then we have at least a 2-year on and off switch where the economy is going to be going on and off. And people are going to be looking to make purchases without having to leave their house. So e-commerce should do very well. So we have 70% allocation currently. I'm still researching the right proportions. They're looking at those two ETFs. Then we have biotech, medical devices, and then assuming that Boeing's just going to crash so far and then get massive stimulus and bailouts from the government. I do like that one as well. So we'll be looking at rotating into these 5 ETFs, not necessarily all of them at once. At some point when the VIX has popped, I believe, well above 100. And so we got some of the stimulus. I think 850 billion still a little light. They're getting this pushed through. We're going to see the treasury auctions start increasing in size. We're going to see the Fed doing aggressive QE to make it an attractive investment. No one's going to buy treasuries if they think the yields are going to keep rising. And so we're going to have very little tax receipts this year relative to last year, and bigger deficits to fill. So they either have to let that yield just go extremely expensive, and then people will question if we could pay the interest, or the normal playbook is, again, they drive rates lower. And just think about it. If you're a primary dealer, you borrow for 0, you go buy a treasury with a positive yield, you know that that yield's going to go down over time to sell it for a profit. So you like it from 2 points of view, but that's not where the deal ends. So step 1, borrow for free. Step 2, buy the US treasuries with a positive yield. Step 3, lend that treasury to the repo market. Step 4, you get cash. Step 5, you loan that cash to broker dealers. So you're making money in 3 ways with one setup for free, with essentially no risk. So that's just the incentive for bond investment is at all-time high right now. Jack Tan says TLT 515, 157 becomes 0. Is that I don't see what the question is. Oh, you can't get your position out of Robinhood?
Hey, Jack, and if you can, bud, go ahead and unmute your microphone too. It's just it's a little easier to communicate that way.
And the other assets we're going to look at a huge discount will be oil and gas. So I think there's more pain there, but these are going to be at such a bargain. It'll be some easy trading, but you got to be patient.
Hi, Jason.
Hey, Jack, how's it going?
Good. You know, I have a TLT that I purchased, expired 157, expired at May 15. It becoming 0, becoming 1 cent. The value in Robinhood. Do you heard anything about that?
Robinhood's been having trouble. Weren't you getting out of Robinhood?
I did, but you know, I like the platform so much, so easy to use, so I use Robinhood still.
after they threw you on the curb?
Yeah, so I have 33 contracts on Robinhood, and I purchased it at 164. My break even, I guess, 33 contracts at 164 break even points, I guess.
I think
Jason?
I
Would
think
it become $50?
their system's down because it's not worth a penny. So I'd just wait for it to come back online.
Jason,
Yes.
this is Kathy. The market's halted and all the option prices go to zero during the halt. It's
Yeah.
scheduled to come back on at 11 after, and then it'll repopulate.
Yeah.
Okay.
There you go.
Yeah, the bid on Thinkorswim is showing zero on a whole lot of TLT options. So that's
Okay, thank you.
the result of the market halt.
Yep, exactly. Sorry guys, I was just researching that too. But yeah, market halts will do it.
Cole, did you have a question?
$235 SPY. Wow. So yeah, it's going to be some very good deals at the bottom. Oil, gas, and then we'll jump into these healthcare, e-commerce stocks. Should be some of the easiest money. It's it's like being aware of a crisis in 2008 and then being ready to buy at the bottom at 2009. And you know what happened after that. Go ahead, Jack.
Oh, no, that's okay. Thank you very much.
Oh, you're welcome. But before all
we're
that,
we're at the Christmas massacre spot right now, the Christmas 2018 low.
oh wow,
So below, and once you break through that, below it is the spring of 2015 support level and fall of 2015 support levels at 210 and 190. So it seems like there's just not a lot of resistance until you drop down to 210, 190 area.
Waiting for you. Cool.
yeah, it's too expensive to buy the put option to jump in right now. So people will just be crazy. Malvis says, well, so yeah, I like healthcare, biotech, e-commerce, medical devices, and actually the defensive plays as well as oil and gas, but not yet. I think it's going to go unbelievably low. So we're going to be picking this stuff up for maybe 10 cents on the dollar, maybe 20 cents on the dollar. At the worst, I'd say 30 cents on the dollar. So we're looking at around a 70. I think the S&P 500 is going to crash way more than 50%, maybe closer to 70 to 80% for a very short period of time. And then again, the whole system's designed to let the banks borrow for free from the Fed. Imagine the Fed goes to a negative rate. Now the Fed's going to pay the primary dealer to borrow money. Then he's going to go buy a treasury with some sort of a yield on it, which he knows is going to go appreciate over time because everybody's going to be buying that treasury risk-free. Then they're going to go hand that to the repo and get cash. Then they're going to go loan that to the broker dealers like TD Ameritrade. And they're just making money in every way, shape, or form. So it's really not fair. Our systems should be allowing the exposed to go bankrupt and just get them out of our economy. Unfortunately, that's not the way it works. I do think tech will come back, but who's going to really benefit from this crisis? Tech's going to do fine, but not right away. I think the big pump is going to be the ones getting government handouts and a huge increase in demand. So the demand for Microsoft and Google, probably the same. You know, it's going to be maybe a little less. The demand for Amazon is going to go up. The demand for healthcare is going to go up. Demand for biotech, medical devices is going to go up. And if we start getting into a hot war with China and Russia, and plus we know that, you know, they're going to bail out Boeing here. So I just want to see who's going to have the biggest change in revenue and profit margins in the shortest period of time when the panic really hits peak, because that's when we're going to buy. And so I think oil, natural gas is going to just be incredibly cheap. And then I'm looking at who's the direct beneficiary of this crisis. And again, that's so at some point I do want to get back to the hallmark technology companies that really made America what we are today. But that's not my first play.
Okay, and Jack, you should see your bid and your ask come back now too. Yeah, Julio, the bid and the ask when the market's paused does so 0 by 0. Yep. Let's see here. Okay, guys. What a wild day here. And let's see here. Any questions, guys? That was oh, nice question, Craig. Jason, how does the price of TLT get calculated?
Yeah, let's look at that. Let me throw it in the chart. In my charts, I don't know what on earth happened. I'm going to I'll probably spend a whole day updating that so we can, what I'm going to do, I love the setup Gunlock goes through to analyze markets. So hopefully by next week, I can have that all in my system because it's a beautiful, beautiful set of things he looks at. And by the way, he's predicting the Fed will have to do the same moves. He hates betting on negative rates, and if you did listen to his thing, he's expecting the Fed has to save the Treasury market, but he had expected some blowouts and some rising yields. But in the big picture, the Fed's going to have to manipulate that. He doesn't like that, but he expects that. He got out of GDX, and because he says the miners, even though they have great fundamentals, they still live in the stock market. So we have 2 months of protection on GDX. So I'm not worried about it. If we don't see GDX going up in 2 months, then we're perfectly fine. We have the put to protect us until then. He likes gold, spot gold. And he's getting, he closed out some of his shorts that he was up 100% on. But he's getting excited for the opportunity to buy stocks, as am I. But again, he did not say in any way, shape, or form that you should buy now, just to get your appetite wet, which clearly, we can see the spring on this puppy once it does hit a bottom, if you time it correctly. And let's just talk about how we would get into our position. So I wouldn't start off just buying it outright. I would sell puts to get filled for a huge discount or to just collect some huge rates. Okay, but let's go back. So this is what's affecting the price. So when we got on 3.9 to 0.99 on the 30-year, that was a 180 TLT. Okay, we went up in yield to $1.63, and now we're at 147.88. So if we get back to, I think we'll get back to this level and go far below it. So my targets still remain TLT goes way above 180 as this crisis slowly unfolds. And again, we're just really at the tip of the iceberg. We haven't, if you watch what China had to do to solve the problem, then you watch what South Korea had to do, then you watch what Hong Kong had to do, Italy's had to do, France is starting to do, Netherlands is starting to do, then you know exactly what the United States will have to do. And at some point after they've done that, they're seeing results delayed like a month later. So after America's in a complete lockdown, because it's just gotten so bad, there's so many people dying, the hospitals are overrun. And then Trump says, all right, national lockdown, penalties if you leave your house. Probably about a month after that will be a good time to buy. You'll be at peak panic and layoffs are just getting out of control. It's just going to be very ugly. And so unfortunately, I watched this from the very beginning, and I've seen exactly how each country's had to react to this, and it's been the same. Unless you want to go the just outright brutal strategy. The brutal strategy is you just let it come in there and wipe people out and lock them into their houses. I don't think the US government could get away with that. Gary says more reports that the young in Italy and France are contracting the coronavirus. Yeah, so this report's really good. Did I post this to everybody? Yeah, it gets everybody. As far as dying, if you trust this data, so what's this data from? These guys went and found some reliable, smaller case studies in different regions, China, South Korea. I have to go back through it, but from the data they could get that they believed was trustworthy, this was their best look at fatality rates. And again, fatality rates, from a morbid perspective, that's actually good for us getting through this. Faster people die, the better. Okay. What's an economic consequence is requiring hospitalization and then having a government that's going to do everything it can in its power to save as many lives as possible. So in China, they don't give a shit. We got videos of them welding these people in their apartments. So their cost to deal with this was minimal. Our cost to deal with this is going to be catastrophic to the stock market. And we'll see how long it takes US to rebound from this. I think probably a good idea to start having your grandchildren learn Chinese. So yeah, if we're having to put, I mean, the numbers are just astronomical, but if there's 7 billion people, and let's just say we do some extreme measures and manage to only infect 10% of the population in the next 12 months, that gives you let's see if we have, 7,100 million times 0.10, that gives you 700 million people. And if the aggregate hospitalization case rate is, let's just say 5%, we're going to have beds worldwide of 35 million ICU beds. And right now in the United States, there's 100,000 with 10,000 of those open. But the problem is, if you put these people in there, they're going to infect everyone else in the hospital. So the cost to deal with this is just astronomical. And if we really infected 80% of the population, just let it burn through quickly, then multiply that by 8, you're looking at 280 million people being severely ill and having lung failure in 12 months. So if you could somehow spread that out over 12 months, then it's still 23 million people who are on a ventilator. And so it's just astronomical numbers that can only be dealt with through extreme government intervention. So we have to pull the resources to the government, let them redistribute the wealth to keep key industries alive. And they do this by lowering interest rates and making the value bonds go up. It's really, that's what needs to happen to save the day. Why is our position not doing well yet? Again, we're in a storm that's taking out everything and everyone. And luckily, we were not overexposed. So we can easily weather this current storm. And hopefully we'll be the last one standing, collecting all the shrimp in short order. So that's really the bottom line with how we're playing this market right now. Mark says, from the future, you should learn Chinese. Or Melva said that. Mark says we're going to bomb the Chinese. So the problem is we need China. China needs us for payday, but they don't need us to operate. And now they've got more people to sell stuff to, all of Europe and Asia. US does not have slave labor. So we have nobody to build our iPhones. So imagine our flagship Apple gets cut off by Foxconn, who happily employs Chinese who work for $3.50 an hour. And then, they pay 70% tax rate, which they then go give all that tax to Huawei to compete with their own phone company. So yeah, I think the public can only cope with so much at a time. So we're seeing Trump slowly change his tune. I love that they got the drive-through set up so people can, we're getting the telehealth set up. They're making some smart moves, so there's some hope. Tony C says, I just joined. How can I get caught up? Yeah, Tony, after this does end, just go back and replay the video with the same link and you can watch it from the start. That'd be a great way to do that. Mark says the plague changed the system from feudalism to socialism, and this plague will change our way back of way of life to something digital. Yeah, we'll see. See who else has a question or a comment.
I love the analogy, Jason, with Forrest Gump and Captain Ron on the boat. Absolutely love it.
Yeah, guys, I hate to say that losing 4% is like rock star returns right now, but losing 4% is losing 5% right now in March, considering the big picture, that's a rock star return. I'm highly confident we have our positions protected, and the opportunities coming our way are just tremendous. So hang in there, follow the system down to the T. Now's not a time to be a hero. Try to take more, don't try to be Mark Stoley right now. He's trying to be a hero. He's killing it. He did really well. But if things had turned the wrong way and, he could have been exposed with a little too much risk. So my recommendation is follow the system to the T. Do not take extra risk. When I'm a little more confident that we're kind of in the smooth sailing zone, not in the middle of the storm, like right now, I feel like I could feel lightning bolts blasting on the left and right of me. Okay, so right now, don't take extra risks. As soon as the storm looks like it's fading away, we can see some sunshine coming through those clouds. I'll tell you when I would say, okay, I'm still playing it super conservative, but take a little extra risk. Right now, I just wouldn't make that move yet.
Do you have a question, Mike?
Yes, a little while ago, I thought I heard Jason say that we own GDX puts. Did I mishear, or did I misunderstand something?
Which program are you in, sir? Are you doing
I'm
the
in
buy-in?
I just started the Pro program.
Oh yeah, so we have the put. Do you want me to pull up that trade alert so we can review it?
Yes, could you please? I'm sorry if I missed that.
Yeah, no worries.
I think Mike might have joined after that too, Jason.
Okay.
Yeah, I've joined fairly recently.
Okay, so this was Thursday's trade alert on the 12th.
And off memory, Mike, did you join on Friday the 13th?
I believe so, yes.
Okay. Yep.
Okay, so here's the put I have. It gives us, let me see where we're at on GDX. We're at 21. So the idea was just one strike above the trading price is really your best bang for your buck. And that allows us to have 60 days of protection and not worry about downside risk. Because the fundamentals for mining gold, I mean, come on, it's beautiful. We got cheap oil, which is used to mine, and we have very high gold prices, and we have every bank in the world printing as fast as possible. So you got to be thinking gold's going up. And if gold's going up, these guys have great fundamentals. So for us, we can buy downside protection with an at the money put, May 15th. I would grab that 22 today instead of the 23. And that basically guarantees you lose no more than the cost of the put the second you put that trade on. So it's one put option per 100 shares. This is known as the married put strategy.
Okay. So one put option per 100.
Yes. Yeah. So I have about 12% of my account in GDX, and I have locked in a maximum loss of 10%. So I can lose no more than 1.2% in 60 days on this whole position because I have that married put. So you can easily add that today. Yeah.
Thank you.
Yes, sir.
Great question, Mike.
Okay, Tony C says an effective preventative and treatment has been found to be a malaria drug, chlorogenic phosphate. The Chinese are using it. And yeah, I would like to see data from democratic government reporting success. So chloroquine from South Korea is something that seems to be working, which I was able to get a prescription for. I think it's actually the combination. So it's the chloroquine plus zinc. They're getting zinc inside the cell instead of floating around it. I botched that again. Sorry. The French.
Do you have a question, Kathy?
Yes, I do. It's along the lines of last night I was making sure all my positions were allotted correctly and making sure that I had the cash on hand for every 30,000. So am I correct that we've used part of that 30,000 to buy some of the TLT calls?
Yes, you've used about, let me just tell you what my cost basis was on the whole, on every open position. So my cost basis for the entire open call position is $4,130. So that's the most I can lose relative to 30,000. And again, I have a lot of time for these to play out. I have all the way to 619, 515, 417, 43, 327, 320. So that's my cost basis and time horizon for these to pay off. 40% is probably low. You're probably below 40% on TLT because of that sell-off. Don't fill up yet. My intention is, again, to fill up on the TLT if it does really sell off, but we have that put. So we have that put saving us right now. Best action right now is just sit back, make sure you have the right exposures, weather this storm, and be ready to buy assets at pennies, maybe not, I'm going to say dimes or quarters. Probably quarter on the dollar is what I think we're going to get in terms of discount in certain markets, oil, gas. If they keep manipulating gold, we might even be able to get gold cheaper. And then again, I like the healthcare, the biotech, the medical devices, and the e-commerce products again, but at a huge discount. So I want to see this massive systematic selling where people are just blindly selling everything without regard to really thinking about it. They're just liquidating because they have to. weather that storm, and we're going to buy these different critical assets that are going to get direct jumps in revenue from government bailout, or just from a change in the environment. So e-commerce is going to have a great jump in revenue because of the change in environment. Who's going to have a good P&L for Q1? Amazon is, guarantee you that. They're probably going to have a record quarter this year.
Yeah, they announced last night, Jason, that they're going to hire 100,000 employees and bump them from $15 to $17 an hour.
Yeah.
So yeah, that's a telltale.
So the systematic selling's why I'm not buying these assets now, because a lot of people have to sell everything to survive. Okay, so we got to weather that storm, and then we're going to buy.
Yeah, and we're actually right now finally starting to actually see the first bit of capitulation, Jay. I'm looking at it, and we're on the biggest volume bar now in 20 years. So I think we finally are starting to see
30
it.
SPY. Woo! I wonder if we'll hit that 20% down day today.
I said this morning we might do it. Let's see.
Murray says GDX put option ratio to shares 1. So you should have his position, Murray, but you should have 1 per 100 shares of GDX. I'm going to be right back, Dean. I'm just going to fill up my tea and be right back. So I'll be right back. We can watch this stock crash together for a little longer, guys. And I'll let Dean answer questions while I'm back. Let me just throw up our current trades right. There you go.
Nice. Thanks, Jason.
Okay, I'll be right back, guys. A few minutes.
Hey, is it me? I'm not getting updates on Thinkorswim. It seems locked up. Now it's starting to move. It was not moving for at least 3 minutes there.
Yeah, Mark, log in and log out. And I've seen when things get, when the market gets really crazy like that, if you just jump out and jump back in, best way to get things occurring again.
Okay, thanks.
Yep, my pleasure. And let's see here, guys. So what I'm going to do while Jason's getting some tea, I'm going to just screenshot real quick what we have going on the SPX. But we're kind of just now starting to see what we're looking for as kind of the start of the bottom here. So, and not saying, today's the bottom by any means, just saying this is the start. And we'll kind of look at a couple things real quick. Let me measure something out real quick for everyone.
Dean, can you hear me?
Hey, Jose, how's it going?
Hey, how's it going? Good.
Nice.
Yeah. Quick question. Just looking at all these options contracts that you have open here, do you recommend to buy them now at the prices that they are right now? Because I think I bought some of these at a lot lower price, but right now they're expensive.
No, so if you have them already, don't add them. Okay. But if you took profits and the whole thing Jason was putting about there, right? If you did take profits on any of those contracts, you can add those back in. Okay. But so if you already have them, Jose, don't worry about it. You're already good to go and set the jet.
Okay.
Okay. Yeah, my pleasure, bud. Okay. So just doing a couple things here, guys. Yeah, and we're certainly at the biggest volume bar we've seen in 20 years on SPX right now. So starting to see some of that systematic selling. And I'm going to go back to, I'm just going to highlight a couple things. Okay, in this little screen I'm making here. And then, so just typing a couple things in, guys. Okay, cool. And so I'm going to go ahead and send this to Jason here. And so we'll just have a couple things to look at really quick. And let's see here. Okay. Okay, cool. Got it. And what I'm going to go ahead and do now, guys, is post this into the chat box. And it's going to be a link that we can click on. Okay. Gary Barbers says, re our positions. Do we also have an EEM put? Yeah, Gary, we do have an EEM put. So definitely keep it. It's probably well over 2,000% profitable at this point. Okay. And I'm going to go ahead and post this into the chat for everyone here. And then I'm going to go ahead and post it in the chat for Jason as well. Should we re-up EM out? No, Malvis. Hey, and Malvis, I was looking. How did you jump into the webinar today? Was it via email or via link? And Malvis, if you want, but go ahead and unmute your microphone if you have the ability to. Let's see here. Okay. Link, I believe. Okay. Huh. Okay, cool. Awesome, Elvis. 'Cause I was just seeing that you expired the other day. So I was just wondering, I was like, oh, I'm pretty sure that's the guy I saw that expired. So anyways, can certainly figure out what happened there. Okay, guys. And I'm going back to the webinar here. Hey, and Jason, I just posted a link for you to review. I just pulled out a 20-year volume bar and some cool technicals to kind of take a look at and highlight it so you guys can see kind of what we're looking at there.
Rome is under siege. We're watching the empire burn down as we speak, guys. So I think we got to recover. America has to recover and then retaliate. That's what I see coming. I wouldn't change the puts because when I got you those puts, Malvis, volatility index was lower. Now it's way higher. So that means put options are not a good deal. So what's the best way to bet down on a stock market after it's crashing? You bet up on the bond market, which I know is not working this second, but I believe it will. And again, we have discussed the reason why people are just getting blown out. It's Forrest Gump. Forrest Gump, shrimp boat. Everybody's just getting wrecked. Our goal is to just stay standing, and then the good times will be there. Wow, this is just insane, insane. So where are we down? 8%. Where did we close yesterday, though? So we closed yesterday at 254, and now we're at 232. Wow.
So in our recent biggest drop was right at 11% on the day. So it's kind of the measure.
Look at that thing.
Life is like a box of chocolates.
So here's the Christmas massacre Mark was telling us about.
Yep, blew through that.
Let's put this in the scheme of things. Ooh. Yeah, so could be in this, somewhere in this range, I'm afraid. Imagine if we went to where the last two crashes bottomed out. Wouldn't that be something?
Look at the volume around that 2008 sell-off. We're not even close to that yet.
Yeah.
Yes, on the weeklies we've exceeded it already, big time. But the velocity of this crash is just so different and not even comparable to really.
Wow, but yeah, look at Mark's point with the monthly though. Holy crap. There's just no buyers. Wow. Look at that. So yeah, I think rather than looking at technical analysis for this, we should look at catalysts. So I think the big catalyst will be the lockdown. I couldn't believe this was unfolding, guys. The only reason I was somewhat on top of this was because start off the year. Well, first of all, I didn't think the Chinese were going to sign the trade deal. You guys all know I didn't think they would sign a trade deal. And then they did. And then we find out all of a sudden their stock market's crashing while the US market was going up. And the only thing I could find was this little virus was spreading. And it started off at 30 cases on a Wednesday, 70 by a Thursday, 150 by a Friday. I was like, ah, this is nothing. But by that Monday, and this is when they entered into their holiday, it was up to 1,000, and then it was up to 2,000, then 4,000, and started spreading. Let's look at, let me pull up that. But yeah, look at that. That's a great point, Mark. Look at that. We're barely, we had all the doctors I'm talking to, they're so busy with what they do for a living that they're all saying, I don't even want to look at my retirement account. So as soon as they start looking and panicking and realizing this is just getting started, there could be a lot more selling, way more selling. Look at that. We're not even in the volume of, this is like average monthly volume for some of these down periods. That's crazy. So yeah, I fear there's much deeper crash ahead. Let's just take a look at the Johns Hopkins data. So for a while, I was tracking this per country, almost with disbelief every day that if this was growing in any sort of exponential rate, that we were going to have some economic consequences. And then after a while, it just was pointless. I knew it was growing exponentially. So here's how I like to track if society is dealing with this or not in a fashion that will. So this is log scale on the left. This is outside of China, who again, I believe they're sitting there making, I'm going to pull up some of the quotes. Why is Twitter letting this propaganda of the CCP flow through? I think we have some traders in our sailboat here in the United States. I know we do. It's quite well documented that China has been bribing everybody under the sun, stealing everything under the sun. But why is Twitter banning zero hedge and allowing some CCP asshole to say stuff like I'll read in a second? But let's just do this chart, and then I'll try to pull up my Twitter so we can read some of the stuff I've been retweeting. So log scale lets people track exponential growth. Because if we don't have it log scale, it looks like it's going straight up. You can't tell if it's really exponential or not. So on the left, we go, instead of 10, 20, 30, 40, 50, 60, we go 10, 100, 1,000, 10,000, 100,000, a million. So what we want is to get this to stop growing exponentially. And that's going to only happen if we go into some form of isolation. Social distancing. The more we go into that, the more economic downturn, the more layoffs, the more bailouts, the more money that the government has to spend that it doesn't have. So that's why, in general, you really want to be betting on bonds and gold. Timing's tough with everybody getting blown out of the water, but this is the simple chart that you can look at. And if it's going up, the problem's nowhere near solved. Okay, so that's one. Let me pull up my Twitter.
And Jason, I think James Goodman unmuted his microphone. I believe he has a question.
Oh, please go ahead, James.
Hey, James, if you can hear us, go ahead and feel free to speak freely. The microphone will pick us up and we can go ahead and address any questions you may have.
And if anybody does want to follow me on Twitter, it's just generates income. I don't post my own content. I just retweet anything I find interesting. So you feel free to follow that. Go ahead, James.
I'm wondering if you could buy 1,000 shares of TLT, what expiration dates to use? I mean, 3 of them now, but how to split 1,000 shares in number and expiration dates. The same with GDX, as to what price we should be paying for that, or just the bid of the bid ask, or what?
Yeah, so well, let me go back to the trade alert here. James is in the pro, right?
Yeah.
Okay.
Yeah, he's going to allocate 400K.
Okay. So I'm going to go to the last Thursday trade alert, which is still applicable, plus the put option we gave today. Okay, so 40% of your total capital should own the TLT. So that's step one. So on 400 grand, let's just calculate how many shares that is. So 400,000 times 0.4 is 160. And our current trading price is let's see, 145. So I'm going to divide that by 145. So you can pick up 1,100 TLT total, should be a total position. And then you would immediately protect it with this put, which will have gone up in value. So it'd be more expensive now. It's the 145. So one put option protects 100 shares.
And so, James, we had that price fluctuation from this morning. So it's 1,100 shares. Okay. And then if you have 1,100 shares, how many contracts are you going to buy on the put option that's on the screen?
I have nothing on the put option.
That trade just came out this morning.
Yep. So with 1,100 shares, you're also going to buy 11 put options. Okay. For the April, let's see here, April 17th. And what was the strike again, Jason? I can't remember off the top of my head. Let's see. I'm sorry, my cursor was over of the 145 puts. Okay. So buy 1,100 shares market. And then for me personally, I just use market on the puts too. So you're going to have 11 contracts on the April 17th, 145 puts. So once you replicate that, you're good to go on your TLT. And then in regards to GDX, we might need to redo the math, but the last time I looked, it was 1,600 shares.
Yes.
Okay. So those are in now for you?
Yes, I bought them at the market.
Okay, perfect. So 1,100 TLT and 1,600 GDX, right?
Yes.
Perfect. And do you have your put options to go along with TLT?
What we have here, 40% position that used to be in SPY will now trade one contract for 30,000 that would have been invested there. So for that tranche of capital, we'll use 5 contracts per option. That snows me under. I'm not sure what we're saying there.
Okay, so Jason, can you scroll up on the trade alert now, and then we'll show them the options to put on.
Okay, you ready for the GDX trade now?
So he's good on GDX. He got the 10% position in GDX on 16. He has the shares of TLT. Now he just needs 5 contracts per call options that we have today.
Yeah, you get those calls for even cheaper now.
The calls on the TLT, you mean?
Yeah. So you would have, let me just tell you how many of this it is.
It'll be 5 contracts at his asset allocation ratio.
That's 5 contracts. But here you're showing the TLTs. There's 6 of them. Do I buy about an even amount of each?
Oh, no, let's tell you. So this is what I would do. I can't tell you what you should do, but if I had a $400,000 account, I have 40% of that ready to buy equities, US equities specifically. So that's going to give me $160,000. So I'm going to divide that by 30,000. So I'm going to get 5 of these. That's what I would do.
5 of each. Okay.
That's what I would do with that much money.
Hey, and Jason, Frank wrote in, he said, kind of a noob with options. Can you demonstrate perhaps on a paper trading account how to buy one of these options using Thinkorswim?
Yeah, so it's, we got the good pictures of that actually. So you're going to want to go to the watch list. Let me just find today's trade. Here you go. So, oh, we did do any new trades. Here's an example though. You're going to want to click trade. Let me just go back to one that has a screenshot ready to rock and roll. Let's go to, sorry, I just started doing the option chain. I'm going to find you a picture of how the order form looks though. When did I send you that? There you go. I just started doing the option chain quite a while ago, huh? There you go. So you're going to end up on a tab that looks like this. So you're just going to go, you can go to your watch list, click the ticker, go to the options. You're going to have these different expiration dates. So you find the right expiration. The left side, you have your calls, and the right side, you have your puts. So we're interested in clicking on the asking price. That'll tell it you want to buy.
I'm using search.
And so here's what your order ticket will look like. So you're going to buy one, and then you hit send order. Now, if it's your first time, Frank, I would just call Thinkorswim. They have the best support and have them walk you through it. They can even share your screen. But yeah, it's pretty easy. So you go to your watch list, click on the option button, and so you'll start on the chart. You're going to click on the options right here. Find the right.
Schwab thing. I don't use Thinkorswim. I use Schwab.
Okay, so I call Schwab. They own TD Ameritrade, and have them walk you through buying to open. So the wording is really well done for you to get filled. But yeah, you want to buy to open these different options. I don't have a Schwab account to demo, unfortunately, but yeah, they're the parent company of TD Ameritrade. They're highly recommended.
Yeah, so what you can do, James, is just so you have everything done but the options, and just call them and say, I need to buy 5 contracts of the following option chains. Okay, and they'll walk you through how to click the 2 or 3 buttons to execute the order, okay?
Okay, thanks.
Yeah, absolutely, James. And then once you do it once or twice, you won't need them anymore, and you'll just be able to do it on your own. And Frank, did that make sense to you, bud? Okay, guys, and a new question from Mike in there. It says, with 225K total capital, I previously used 10%, okay, to buy GDX on Monday this week. Is this allocation correct, or am I supposed to have doubled it to 45,000 allocation to GDX?
Let me see. Okay, so 225,000 capital. I have 10% GDX. Do you have the put option protecting that, Mike?
Yes, I just bought the put option today.
Okay, good. You're set to jet. No, yeah, you should not have 20%, only 10%. Mine's at like 12, so, but 10's good.
Okay, even with the doubling that you had in the Thursday alert, 10% is the correct amount.
Yeah, I'm at like 12, to be precise.
Okay, yeah, that's fine. Then I'm correct. Thank you very much.
You're doing good. Very good. Great question.
Good job, Mike. And a great question.
Yeah, Frank, just you don't even need to do the order yourself. Just call Schwab, tell them what you want. Have them walk you through it. Ensure that you want to be long the call, not short. Buy to open, and Schwab and TD Ameritrade. That's probably one of their. Besides having beautiful platforms, they have great customer support and low commission costs.
Yeah, and Frank, one of the things I did when I first started too is I just placed a couple options on paper trading. Okay, so in the paper trading account, so you just theoretically place the option order, right, with monopoly money. You see how you do it a couple times, maybe have them walk you through that twice, and then, go through and either just use paper trading capital or real capital, whatever you're most comfortable with. And it's kind of cool, guys. Quite a few of our members that, hadn't traded options too much. They knew kind of, the basics of options, how they worked. What they'll do is they'll just, during their trial or after they purchase the membership, they'll actually follow a couple trades just with paper trades, right? Just see how everything works, get comfortable, and then switch into real capital. So that's always something really nice that you have available to you at any time. It's always good to go to the batting cage a couple times before you step into the game, right? All right, very nice.
All right, guys, what's the SPY? Is SPY still around? Just kidding.
Yeah, 230.
230, wow. Quite a time. I've been sitting here wondering when I'd see a financial crisis. Who would have thought from a coronavirus that the public wouldn't take serious?
Yep, and then your wrench, let's see here what it is to the tick. Throw the wrench of, what is oil at right here? Throw $21 oil into that as well. And
TLT put earlier is really helping out there.
Yeah. Well, I figure there might be a few more people going out today, so. And we got that put for a month, so that gives us a lot of protection. This is a blowout. All right, guys. Well, I think we have answered all the questions. Sorry we're down a little bit. Sometimes you get the right forecast, but we didn't see something that would get in our way. So that's my fault. But big picture, no change, still confident.
well,
And
Jason,
for new folks, man, you guys are getting a great opportunity to get in for less than we are. So.
Yeah, and Jason, thank you so much for all your help though, but I definitely sidestepped some massive losses in my account. So really appreciate all your help and all your hard work.
Yeah, so Dave was, he's like, when are we going to buy the SPY? I was like, I think it's going to crash over 50%. He's like, no way. Because, I mean, back here, people would have thought you're absolutely batshit crazy when it was at 321, huh? And then who would have guessed in short order we'd be at Christmas levels. And then soon, next thing you know, we'll be way down here. Whew. It's a bloodbath. So get ready, guys. Get ready. The opportunity to buy these assets on, I think quarter on the dollar is so 75% crash is kind of what we're looking at here. If we go to 1929 Great Depression, then 90% and dime on the dollar. So at some point we're going to have to say, all right, we're willing to get in and take some volatility, knowing that there's going to be a sharp rebound at one point. So, we might be jumping in somewhere not at the very bottom. And again, I have a good strategy for how to get us in with low risk and make a good return without being too greedy. Scotty, let's get Scotty and then we'll probably wrap it up. How much is that QQQ put up that you boot campers have? I could look that up too.
Pushing 2,000.
It's up 2,000%.
It was like, it was fluctuating between like 1,700 and 2,000%.
Wow. Ryan, are you still out there?
Yeah, I'm trying to get Scotty unmuted, but I can't.
Oh, hey, guys.
There
Thank
he
you, Ryan.
is. There he is.
You flipped me the button and I didn't see it. Well, this wasn't my point, but you just made a good point I want to make is that I'm on the boot camp, and the beauty and the necessity of this portfolio is that it's balanced. So in the boot camp, I was picking and choosing, and I've got some winners definitely, but my total balanced portfolio, if I followed the boot camp trades as I would have, I'd be up a lot higher. So it's just, it's getting my brain out of this mode of picking and choosing, and you talk about it all the time, right? Well, I'll take a little bit of this, but I don't feel like taking that. No, I would have been so much better off following all the trades as shown.
Let's see what this guy's at. Yeah, well, you know, we're all just doing our best with the information we have, right?
Well, I'm doing it now. I just it's just a matter of like, okay, I've got to have a mindset. So where is this? Is that?
So this puppy is at, so this is a trade we gave our boot camp, 1% position. It wasn't designed to get you rich. It was designed to cover your ass in a complete catastrophe, which I was pretty confident we had coming our way. So we have the 150 strike, and that's currently trading at 38, starting at 300. So that's a pretty good return there. So we went from, so in our boot camp, we put this trade out at 290, and that's a big position. I mean, 1% on an out of the money put is pretty much giving money away 99% of the time with this trade. So I told everybody, this is pretty much giving your money away. But if an absolute catastrophe unfolds, which I was quite certain would because of watching this virus spread and how the only way to stop it was to shut down your economy. So let's see that 150 put, 295 is currently trading at. And this is the only one Mark didn't get.
Yeah, and Jason, you know, I was actually looking at my QQQ
Me and you, Mark.
for April.
38.
Mark and I are going to have to go commiserate after this.
So if you made 1,000% on 1%, you're up 10%. So yeah, look, if you're in the boot camp, even though we were right about the stock crash and the bonds should be killing it, we should be up 20%, 30% right now. If you had this little trade, you have a total return. I guess that, what would that add to your basis points? I think you'd be about flat right now or close to. So.
Yeah, it was and I was looking at my April Qs. Jesus.
So this one we can hold. I mean, so I was trying to hit 10,000% return on this trade. Every dollar we go down now, this is jumping every $3, I believe it goes down now, it jumps another 100%. So, and there's just, yeah, that one's just getting going.
Hey, Jason, here's my point. It's an aside, okay? But I literally just got an email alert. So this is a hangers on from an old service, okay, that I had a longer time membership, so I still get his alerts. Number one, I would be down so huge if I was still following this other system alerts. But literally, here's this alert, and you can tell me if you want me to read the name of who it is, but I won't unless you want. But it's time to start building positions in the market.
Oh no, who is it? Let's bash him.
It's a guy that I respect, Harry Dent.
Oh, Harry, he's a funny guy. He's not very good at making money, but he sure is good at scaring people, huh?
Yeah, his books are great, and he's a good demographic
He's a good historian.
person.
He's a good historian.
Yeah, historian would be the way to put it. But I've just watched his trades well, first of all, I got killed in his trade alerts and stopped following him, but I've just watched his recommendations as NVIDIA and Avgo, you know, time to sell NVIDIA, time to sell Avgo after it's gone down 40%. And anyway, so he's got several buy alerts, and it's time to start building positions.
What's he want to buy now?
He wants to buy FMY and MS. FMY, First Mortgage Trust. First Trust Mortgage and Income.
Oh,
I guess an interest rate play maybe. Okay, what else is he recommending?
Microsoft.
Now that it's back to 6 month ago levels. That's funny.
See, I just don't see how people. This just seems so obvious to me. You know, government has to bail at everyone, so you you buy bonds. I mean, everybody knows that. And then where's the government going to put the money? Well, they're going to give it to the healthcare, biotech, medical supply. They have the bill that lays it out. It's on paper. There's no guesswork here on what to do.
Yeah, these don't, and he says why Microsoft, but I don't get the correlation of these to the coming needs that your ETFs
I
will
think
build.
he's thinking Microsoft is like, this is your core safe company that, he looks at this maybe like a treasury product. So I get that, like Stanley Druckenmiller, when he was scared of the stock market through all of 2018, this was pretty much his only stock for US exposure. But yeah, this puppy's going to just tank, I bet.
Yeah, but it's like if it's the rising tides lift all
How is that
boats or
taking
sinks all
advantage?
boats.
Yeah, how's that taking advantage of the crisis? So yeah, that's well, thanks for sharing that. It's always fun to see what other people are doing. I hate to get any trading ideas from anybody. I have my little procedure of what I study, and it's sure as hell not any other advisories.
Yeah.
And then you got to make your best, look at the big picture, realize that in the short term, people go out of business. It can create some noise. You got to look through that noise, get the big picture right. So I'm highly confident in what we got here, guys.
Totally. Thank you.
You're very welcome. All right, Ryan, let's go ahead and wrap it up. We will see you guys tomorrow. We got a double header. So I'm going to get a new spreadsheet to boot campers and everybody so that you have a new spreadsheet. And it just has those new investment vehicles that we're interested in getting for a discount in the near future. So we'll cover that for the bulk of the boot camp. We'll work on transferring over our trades into our spreadsheet. I don't anticipate any new trades tomorrow for boot campers. For our pro membership, if the TLT sells enough, I might refill a little bit. So we do have that 40% exposure, and then just keep our put open. So this is a dip I'd like to probably, but I may wait a week. I might just see how many people get blown out here because we're completely protected with our put. So we really don't have a lot to worry about. And now we're just counting on the Fed to do what it does best. And that's buy bonds and cut rates. So yeah, so look at this, guys. I'll leave you with this. So most of the time, the TLT sells off when it's rainbows and ponies. So during the last time China almost crashed the world economy, and this is with Obama and Joe Biden patting them on the back. They almost crashed the world economy here. And look what the TLT did. Now we have an administration that's going to punish the hell out of these guys. So it's selling off. It's not rainbows and ponies. Okay. It's just not rainbows and ponies. The worst is yet to come. This thing could go parabolic on us very, very quickly here. So I really like this play. Let's look at the.
Hey, and Jason, just real quick, but I just got this awesome message from Thomas. He's one of our lifetime members. He said, hello, Dean and Jason. This is Tom. I just want to thank you and Jason for what you're doing for us, especially older folks among us who are probably freaking out about right now. Without you guys, I'd be down huge. I'm actually flat to slightly up. You're giving us so much value in the service. Thanks again.
Oh, thank you for that kind call. Yeah, sometimes just the alert to get out is worth the whole subscription cost. So that's, that part we got right. I got that right. I've been telling you to get out for quite some time. You probably paid for the subscription for the rest of your lifetime just from that. Okay, but let's look at this. During the last crisis, during every crisis, this TLT goes up. It's only after the problem's resolved that the TLT comes back down and then stocks go up. Okay, so I think the problems are just getting started and that the TLT is going to go to levels that have never been seen before. And that's going to be required to cope with the crisis at hand. So here's TLT leading into the crisis and then boom, jumping way higher. So timing can be tough. Who would think that 3 of the most successful hedge funds in the world are having margin calls and potentially having massive losses? Who taught this strategy? That's the crack of it. We're able to do quite well right now using their own strategy that they got greedy with. Okay, so what's the difference between our strategy and Ray Dalio's? He was using multiple layers of leverage, and all these guys were, and trying to almost force the markets to generate profits by anytime the bond market went down, they're taking profits off stocks and then leveraging into the other asset that was down, which in itself caused everybody to sell stocks and buy bonds. And then they'd be the first ones creating that trend. As soon as bonds are going up, stocks are selling off, they would rotate back and they're using leverage. And so when oil tanked, when people started getting liquidated and margin calls in that sector, plus stocks are tanking, then we have people having to sell their bonds to pay for losses. We got both selling at once. You're wiping people out right now. Not us. We're hardly scratched and nothing but opportunity ahead. So I'll leave you guys with that. I really appreciate everybody. Tomorrow is our pro member meetup. So we'll look at maybe, fueling up the old gas tank on the TLT a little bit. We're not quite at 40% with this sell-off. We have that put helping out. So that's very fortunate we put that put on today. And I'll consider possibly refueling the tank tomorrow. I might wait till next Thursday, just let a little more margin calls get filled. And then I do believe that we have to make this bond market appreciate to solve the crisis at hand. It's not going to happen in the stock market. All right, Ryan, let's go ahead and wrap this up. We'll see you guys tomorrow or Friday if you're in the basic program. So thank you so much.